All right. Hello, everybody, and welcome back to another Pepperstone live event here over on YouTube. Today, we're talking about everything from stocks to commodities to cryptos, and what a week it's been in every kind of aspect. We've got big move outs in breadth in the US markets. Obviously, currencies like the US dollar starting to come under a bit of pressure. And we're kicking off earnings season with some big tech after the banks coming in on Thursday. So stick around for the next 45 minutes to an hour. Tyro and myself will be going through everything that you need to know about markets right now. And a big warm welcome to you. As always, if you have questions, please put them in the comments section down below and we'll answer them throughout the session. Ty, it's been a wild week of news and, of course, a wild week of volatility and some big moves in the Russell. What are your thoughts so far?
Yeah, it certainly has been. That Russell has been explosive, and look, it's fast approaching the target that, we might have been a little bit of an ambitious target set a few weeks ago, but by golly, it got there pretty quick. So looking forward to jumping into it and a few of the other world indices that are really starting to, give us some nice technicals to work with.
Quick shout out just before we start the show. We've got Grace, James, Aussie, and Presto in the chat, along with many others out there. Thanks so much. Give it a thumbs up if you enjoy the content. We'll see you right back after this risk warning, and then we'll get into everything we're covering today. See you in just a moment. Okay, so Ty, I think it's probably best we start with probably one of the most large moves, I guess, in the world right now. Of course, gold. We need to focus on that as a little bit later on, as gold has got a breakout to an all-time high, and US 2000 put some pressure on. It's been probably the weakest of the major market indices, but that all changed as of the CPI read last week, and of course, that's continued through with expectations of a big rate cut coming in, which is huge news for, of course, everyone out there around the world. If the Fed do rate cut in September, which I believe now is between an 85% probability to even 95% probability I've seen on some stats, if they do that, then that could usually start the process of cuts. And it's incredibly unusual to get this at this time of year, Ty. We don't often go into the macro side, but to basically have this off just a couple of okay reads in CPI, maybe it's a little bit knee-jerk. Do you think they'll cut in September? The market obviously thinks so. What are your thoughts there?
I personally don't think they will. I think that the market, I think a knee-jerk reaction is probably the best way to describe it, really. The market's certainly anticipating the cut, but hey, there's still a lot of water to go under the bridge between now and then, and I think things can change on a dime. So look, it's been a move that look, it broke out of a very, very sideways action market. Like we talk about these levels all the time, right? Like we've got basically we spent weeks and days going sideways, doing very, very small range moves between the 2000 and sort of 2050, as we can see right through there. And when it did eventually happen, but it really barely gave you a chance to actually get in. So very interesting. I think though, 2300, you've got to go a long way out to see 2300 as a resistance point. But by golly, there's resistance there. It's a very, very heavy level at 300 in the past. You got to go to a weekly to see it. So I think now even though we've made the move, we've done this before on the Russell though, and I think that it is playing catch up a little bit to the other two indices. I think it's been the poorer cousin for quite some time now. So really, although it's been very explosive for 2 weeks, I think it is a bit of a catch up move.
Yeah, it's been a huge move on the Russell, and I think if you're going to catch something like this, just so we can go back and look at some revisionist history, so you're aware of what really made the change. The weekly close was incredibly significant. To be above these wicks here, in particular, made this a very explosive big move. That was, in my opinion, the absolute go. As soon as it made a new high from that, if you were a momentum-based trader, you would want to be taking those moves. And also another one that could help you just look at this market would have been RSP, which is the equal weight market. And we saw that also come through about 4 trading sessions ago. And you can see the strength in which that moved through. So Russell 2000 and the RSP are both great charts to be having on. And as soon as they got through, especially this is a big range, as soon as that happened, that was a breakout. And as Ty mentioned, it was a long time coming. So one of the things we've seen here a few times since we've been doing the show, we looked at Tesla. We saw a lot of long leg dojis, which basically meant a coiled market. Whenever you see a range bound or coiled market, especially if the breakout happens in the direction of the new or prevailing trend. That could be a great sign, especially in this market. This market is quite bullish across the board, and it's getting those rallies. So we saw the US2K do its thing, Ty. The NASDAQ, on the other hand, is doing pretty much what we expected, which is rotation out of tech, rotation into the other stocks. That's keeping the US 500 kind of sitting around the same level, and the NASDAQ actually getting sold off. And for anyone that's wondering, a good combo in your Pepperstone platform to also have with TradingView is the semiconductors versus the SPY combo. And what this is showing you is it's showing you that semiconductors, although they've been like the best, that's Nvidia, that's all of these semiconductor stocks, they've started to slow down. This is perfectly normal in a bull market. And this is a great way of comboing in to see weakness where you expect rotation. And at the moment, Ty, I'm actually looking for this to come back to mean reversion. Now, for anyone that doesn't know what that is, mean reversion is when the market comes back to the 20 weekly moving average. And if it's been consistent, it can be a great level to be looking for. And you'll notice that this one has been very consistent on the way down and consistent on the way up. And that makes it one of the probably the best read right now, I feel like, for rotation in markets. A great chart. Thought we'd add that here so you guys can start to follow along with that type of thing. What do you reckon about this one, Ty? I love this chart at the moment.
No, it is. It's been very well behaved for a long time, really, and I think we're coming to a bit of a point in the market where, you know, we're going to probably see something happen that is probably out of the norm a little bit. I think. I know we're in earnings season, obviously, and it's going to be a very important 2 weeks in terms of what the market is expecting from a lot of the big companies that are reporting. But looking at, you know, tools like this, I mean, that mean reversion, you know yourself, we talk about it and people say, what the hell are you talking about? It makes a lot of sense. And we could show you a million charts where it happens. And it doesn't matter whether it's indices, currencies, stock, whatever, futures, it happens a lot. So I think that move is, given what we've seen in the past and how well it's respected the 20 moving average, I think there's a reasonable chance that we could probably see it. And yeah, that would be probably the turnaround that we'd be looking for.
It's also coming off this interesting rejection, which is, of course, more of a shooting star after testing the peak. So we're seeing that across, of course, all the semiconductors, whether it's Nvidia or anything else that you're trading. I think it's time to pump the brakes and just say, you know what, let's see how this plays out. It's time for it to take a little bit of weakness after being so strong. Now let's go over to strength on strength, Ty, and that's got to be gold. Very bullish for weeks we've been. We actually picked up on something a few weeks ago, which you can go back and watch on the Pepperstone YouTube channel and check it out. And that was the little inverted head and shoulders down here. And we believe that pretty much when we were doing a live stream on it, we were talking about this breaking out, this being significant change of trend towards the upside. And since then, gold has gone from strength to strength to strength, making a series of higher highs and higher lows. And that's what you want to see in a strong trend. And for now, I feel like it's really just following a strong trend, all-time highs. Where's the next stop? A lot of people kind of want to figure that out. And what I thought I'd include, and we kind of discuss here today, is one of the ways you can do that, which is using Fibonacci extensions. So we're in uncharted territory. We've never been this high on gold ever. It's the highest point of all time. So therefore, what we can use is we can use an extension. And how you do this is you get the Fib extension tool, and I've got some of my favorite ones set up here. And basically you go from the top down and you pull it across, so you've got it all the way to the low. And you usually do it on the consolidation itself. And what this will do is it'll extrapolate out a couple of Fibonacci numbers. Now, Ty, we like Fib extensions this way. There are a few other tools you can use for this, but that's the first one. And what that will then do is it'll kind of give you a few targets. So we've got 2550 and 2600-ish, and then, of course, 2725. The second thing I like to do is to take the length of the move, because often we do see when we've got like a move, sometimes it replicates itself, doesn't it? And that would take us to a 1618 extension, which is probably the most common extension, I would say, from using this technique.
Yep. And it's actually, it's been a very prevalent, that wave move actually in the S&P 500. We can show you that a little bit later when we get across that, that those waves are a very good and accurate way to predict where and how something is going to travel when it is in uncharted territory, such as a highest high that's ever reached. So the S&P, of course, is in the same boat. And yeah, I mean,
Yeah.
Tom, you were willing this to 3,000. I know that
Uh-huh.
you were literally willing it there, and I find it very difficult to disagree that yeah, the continuation of the strength here. You know, look, silver is maybe one we might want to check out. I know some people
Yeah, we
have
will.
asked about it
Mhm.
during the week. It hasn't seen the same strength that gold has, but quite often the reactions in silver can be a little bit longer. So we will certainly have a look at that. But gold is a machine.
It is a machine. And look, silver's like, I always think of as Bitcoin and gold is kind of similar. Ethereum is a little bit wilder than Bitcoin, and so is silver. And yes, agreed. Silver monster breakout. We'll look at it in just a moment. Another thing that you can add here, we've got great technique coming in from Marjan. Thank you very much. Another thing you can do is you can add an anchored VWAP on. And if you want to do this, what I generally do is I put the anchored VWAP behind the significant switch trends. So let's say you thought that was a significant low. You plot it on the low, and then that will track kind of like a moving average behind it. But of course, it's an anchored VWAP. And that can give you a dynamic support in aggressive trends as well. So sometimes playing with a couple of anchored VWAPs off the lows, like this one here, I would leave that on. And you can already see it respected it here, kind of respected around that here. So that means if you ever get a deeper pullback, it's a possibility that if this lines up with the demand, that can be a good technique as well as if you have that bullish bias. Now, Ty mentioned the idea of silver versus gold, or silver not doing as well. In recent times, we saw silver pick up a little bit, but yes, in this current move, it seems like gold goes first, and then silver, in terms of percentages, is moving after the initial gold move. So it can be a good one if you miss the initial gold move. And I believe, Ty, in terms of silver gold ratio, we could be going to like a 0.015. So I still think, as you mentioned, silver has a very good runway on it moving forward. And this actually had an excellent little trade in there. I'll just quickly show everyone the trade. We spoke about this over the last 24 hours a few times, and this is clearly demand. This is the market breaching up, and it keeps coming down to the same demand zone. And you'll notice it swipes the low here and then goes ballistic. Now, this is all a good sign for silver. And ideally, of course, we'll get a new high breakout. But this is consolidation. And at the moment, the trend is still looking towards the bull end. So silver, not quite as strong as gold on the charts, Ty, but what are your thoughts coming into this one?
Yeah, look, it's I think it's lagging only just by a little bit, and it's busting to get cracking. So I think that gold, I'm not so sure gold's going to stop before it gets to that probably 2,500. To be honest, I think it's already kind of on a tear, and I think it wants a
Oh,
little
sure.
bit more. And I think it may well drag silver out of this little. It's not really a rut. I'm not going to call it a rut, but it is a bit of a sideways. I really like a 30 for 31.50. I think if gold can just crack on just a little bit longer, I think we can see silver basically pull itself up, probably to around that sort of 31.50 in the first instance.
Mm-hmm.
And then if we get that high, like I say, I do like that 32.50 extension at that previous high. If we get just a little bit more momentum, I know I think I'm not so sure we're going to go to an absolute new high. I don't trust silver that much, and we must stress, and we always do when we talk about silver, that if you are trading silver on any of the Pepperstone platforms, always be very mindful of your position sizing because they can be very, very gnarly. Okay, so just be. I always say the best way to trade it, if you haven't done it before, get a demo account and play around with the lot sizes to make sure that you understand what your risk is, because many a trader has come undone by silver by underestimating how the contract sizes work on it, Tom, and boy, oh boy, they can be gnarly. So if you are going to trade it, open up a free demo account and play around with the lot sizes first so you understand what you're actually trading. It's a very good instrument to
Yes.
trade, but you need to do it with the right lot size. It's very, very
Yeah,
important.
you do need to know your sizing. So we got a couple of comments coming in here. George and Ozzy say no cut. And then Chris probably has one of the best responses, which is, I really don't have an opinion. I'm just going to follow the price action, which is ultimately a very good technique. You don't really remember our opinion on a cut is unlikely to give us edge. What is going to give us edge is by following the money, following the positions. And one of the things Tyron and I stress a lot is we believe position-based trading, that is recognizing where the largest flows are, recognizing where there's a giant accumulation and structure formation, whether that's on the buy or the sell side, is going to be the future that will really combat as well any AI techniques out there. So people ultimately need to build positions. If you're a billionaire fund manager, you can't put $1 billion in the market like that. It's just not
No.
that easy. You have to put it in over time. And that's why we use techniques such as the volume profile technique, which you can get in TradingView platform with Pepperstone, and of course, anchored VWAPs, and also looking at structures and demand and supply zones. All right. Well, I like silver from the weekly close perspective, Ty. I guess for me, I've got probably even higher targets, but I'm a massive metal bug at the moment. So I'd probably go like a 34.50 is very achievable by silver. And that's still not even up near the overall highs of the 70s and stuff. You can see here what happened during 2011. Silver tends to overshoot massively. So this is looking very decent in the overall inverse head and shoulders. And just if you pull that, I'll just show everyone of the higher time frames. What I'm getting at here is if you think of this as a broken inverse head and shoulders here, or even just an accumulation pattern, that's pushing that 34.50 narrative. So yeah, I would love to see this thing clear 31.50, get a closure on the daily, and then hopefully push on. All right, let's move over to the next one. So I guess that will probably come down to oil. Now, oil has struggled a little bit more than I would have suspected. So all the information, everything that was happening on the weekend, pushed oil down to its bottom low. Such an important level for it, Ty. Must hold this 80.50, I feel. If it doesn't, I'm seeing 78 a barrel if it closes under here.
Yes, I agree. I do agree. And I think that you can make a case for a head and shoulders pattern there too, Tom, on oil. I think if you on the daily chart there is a case for a head and shoulders. And I think personally, if it does, well, not only personally, the technical setup target for that head and shoulders will be around that sort of 77, 78. And yeah, we love we love proofing patterns, and a really reasonable chance that neckline may well be broken. I think it's at its last line of defense now. There is a lot of support here though, at that sort of $79 to $80 mark. There is a lot of support here, but if that support gets broken, and we have seen, look, probably one of the most significant supports that have been broken in the last couple of days is actually the dollar index. And I know we're going to touch on that in a second. So we are at a time where very, very heavy, significant support is being broken. And that $80 mark here on this one is a very, very important marker. So I think if we see a daily close below this, chances of a 77 move are quite high, I think.
Yeah, I really think that to regain here, you're going to need small time frame changes of trend right around this level towards the bull end. Closure underneath this 80.50 brings in the sellers. And if we do manage to, of course, buck the trend, go back up to 83 plus, that's going to be very strong, because I think there'll be a lot of people shorting in here. And if the market just goes kind of low, then breaches high, that's going to squeeze those shorts out. And we'll look at Bitcoin as an example of that later, because, of course, Bitcoin is flying at the moment, really improving. So you mentioned the US dollar. It's no doubt a pivotal period for it. And I believe it's doing what we call a late cycle weakness run now. This could even be the high of the dollar for now. And what I mean by that is that might have been the high, Ty. The dollar is destined for weakness if we are going to see these cuts coming through. That's the nature of what's happening. The US will cut. Generally speaking, also the political stuff that's going on will probably force a weaker dollar. So, yeah, it's this is a huge closure for it. If it does close underneath this, we've got this marked out here as close below, very bearish on the weekly. We've been watching this point for some time,
a long time.
That will bring in 3 red candles as well. To me, that would mean that any pullbacks would be met by sell demand, and first targets, of course, would be down in the 102.50s, and then even the 101s, and then even under parity. This is such a huge deal for the US dollar. So do you want to walk us through what your thoughts are here? Because it's looking dire.
Yeah, it is. Look, it's broken down through 2 very, very heavy support levels. The 105, for starters, had extraordinary role reversal support broken. And then it sailed right on through that 104 to 120 band, which is an extraordinarily important band for it. It barely paused. It was there for about 2 days. Sorry?
It did test it, though. It gave us that.
It tested, no question. It was great. It tested it beautifully.
Actually.
It was a good trade, but it broke down the 104 level, which we know was very, very significant. They were heavy lines of support. So you got to pay a lot of attention when that happens, because realistically, look, we know it's driven by the potential cut of an interest rate. That's why you got to be a little bit careful having an opinion on whether they're going to cut or not. An opinion, you can't trade an opinion because really the market's already factored everything in, right? So yeah, this move is based a lot on what that data is kind of telling us. So the $1 million question is, yeah, I believe it'll test the 104 again from below. I think it'll probably creep its way back up there, and I think that's probably the trade. That would be the good trade for me. I think if it came up and tested that sort of 104 area, I would be looking at very important role reversal levels to turn this around and continue on the sell side. The 20 moving average would ideally be there as well. If it sails on down and gives the 20 moving average touch as well. So if it takes a few more days to actually get there, I think that 104. I mean, I think it will even the heavy traded zone there. You can see.
I suspect this is what it is. Close underneath, pull back into that zone. That is actually the break of structure zone. If we do end up getting a close, so this could be a significant play area forward for day
trading. It's the trade. It's the trade. Yep, I like it.
Yep.
I like it a lot. And the euro is the one will obviously benefit the most from this. We will have a look at that. But this is a very, very important zone. I would be setting alerts everywhere on that one, setting an alert at that 104 level, because it's going to have ramifications of what happens there on several different currencies.
Yeah. So we got a comment coming in here from Fayez saying it's a very valid point. And it's a good thought process. But every other bank is going to be cutting rates as well, and that is very important. You've got to expect if everyone's cutting rates, then as long as they're all cutting or they're all printing together, then generally speaking, why would you expect the US dollar to weaken more? It's got to do with possible policy changes as well. So that's why the market's starting to price those things in. Also, if we are going into late cycle investing, there's often a lot of pressure that comes on the US dollar because, as we know, it's used as a safe haven. But if if deregulation of banks is going to occur, which is the current thought process, there could be a systemic issue there as well. So you might see a lot of dumping of dollars by other central banks as well. And we've already seen that movement for a while now. But yeah, look, there's a lot of macro stuff that goes on. As Tyrone said, is that really going to give you edge? Ultimately, no. What you should be looking at is what's happening on the monthly, what's happening on the weekly. That'll give you the higher time frame thought process. And what we're talking about there is a daily, weekly closure. That 104 retest would be significant. And it's the same thing here on the euro. You'll see it's putting pressure on that high, already been going very, very strong. Does continue to look, very strong. And really what I'd be doing is watching the US dollar. And then if the US dollar does the things you want, the euro is the proxy trade for that.
Yeah. 100%. I look at the US dollar is probably going to push down, further. I think it probably will creep up to that role reversal zone that we talked about. But if it does turn around there, you could see the euro getting to 110 pretty quickly. Actually, I think that that 109.50 to 110 area is a bit of a free for all, isn't it? You've got a very heavy support, like if you look at the euro, it's been very well behaved from a technical standpoint. I think, from technicals, the way we trade, the way we set it up, I think it's been very, very good to us in terms of what it's given us. But I think there is one more push probably up to the 110, and that's not going to take a lot more dollar weakness really to get it there. We're not talking about a massive move here.
Yeah, again 110, even maybe even a 110.25 or something. I think very, very possible. Initially,
more than likely it'll overshoot. Yeah, I would expect it would probably overshoot.
All right, so we've got yields. Now, speaking of yields and, of course, what everyone's talking about, there are some charts that you can pop up on if you want to. If you want to stay on top of what a lot of bonds traders are going to be watching. The first one, good combo code to have in your TradingView platform, US02Y versus the US30Y. And this will give you yield inversion of the longer-term yield. Now, some people look at this. We actually saw it uninvert for a fraction of a second earlier this week. And it's done it a couple of times, but hasn't really pushed to a lower low. Now, it might be worthwhile setting alerts underneath there because this is the first yield curve that usually gets lost. And then we start to see the others tumble. And of course, uninversion of yield curve is what most people are starting to get worried about. And the big one is going to be the 2-year versus the 10Y, which is not close yet. And then, of course, the 3-month versus 10Y. Often people see those as early recession indicators. So something you can keep on your charts if you're interested in it. All right. Well, we go from, I guess, the major oil and US dollars just quickly over to Bitcoin, Ty. Obviously, a massive move here off the base. Didn't quite get to the exact level we spoke about last week. We thought most traded level could be possible. But I can tell you what, there was an excellent momentum trade here. And that started right there. I posted over on our X on this. And, one of the things was when that happened, it was just clear to me that there was a lot of shorts that would have been stuck in this tweezer trade. And they've get squeezed out. And now we've bulled against the bull swing zone. I still see a lot of people going very negative on Bitcoin. To me, it looks like it's strong. I'm interested in your opinions. I feel like it's done the bolt towards the upside realistically, which pretty much started in here. So what are your thoughts? Do you reckon this thing's long now, buys on the dips, or is it still not out of trouble yet?
I don't believe it yet. And only because it hasn't done it in a way. Look, it gave you the entry to go long. There's no question. I think for me, it needs to close above 66K on a daily chart. I think it needs to just do a little bit more. I'm a little bit concerned. I'm not concerned. I'm almost expecting, and I'm kind of hoping actually that we are going to see a bit of a pullback. Because if we see a little bit of a pullback on it, and it comes back maybe to around that sort of 61,000 and then tests the high again, we're going to have an inverse head and shoulders, and a big one at that. And I think that could be the catalyst for a big move all the way to the all-time high. So what we're almost doing here is playing a game of chess where we're trying to, isolate an inverse head and shoulders. We're not half greedy, are we? We want everything. That's okay. That's what we do, isn't it? So I'd like to see the inverse head and shoulder. I'd like to see the other shoulder form. Also from the standpoint that I don't like runaway markets. Okay, so it's hard once a market has moved like this to get involved without expecting some sort of a pullback. So I think a pullback to around that level, you want that there. You want that ability to be able to re-enter this trade with a bit of confidence, knowing that the technicals are actually behaving and holding up. So if it does that, and then we get some momentum and a higher low swing on a smaller time frame, at that point, I think it gives us a lot more ability, I think, to join that trend. And by golly, if it does an inverse shoulders there, head and shoulders, and breaks that neckline above 66, 67, I think that everybody's dream of a 75,000 Bitcoin is going to happen.
Yeah, for me, I'm probably a little bit. Well, I do believe pullback would be met by bull demand. This would be, of course, as deep as you'd want it to go. But I do think it's got all the signs of a significant turn. So you've got things like the downward trend line. You've got the higher high that's come through technically. And then, of course, you've got things like the anchored VWAP, which will come play with it. And I love this breach. So I actually looked at the stats. A lot of people were offside on this trade, and it certainly squeezed them out. So that's why it was so aggressive, because heaps of people had shorts. Maybe the market's liquidated those, but that's that aggression coming through. When you see that, it's kind of like Russell. I feel like the Russell had a huge amount of offside. I haven't looked at the stats on it yet, but I'd say it's there. So Bitcoin looking good. Pullbacks ideally to be met by bull demand. Because we've seen the 20 be respected for a bit as well, you could look around this 38.2 fib pullback, which is 61, which is what Ty's mentioned before. All right. Well, we move from the crypto market to a couple of other pairs. Ty, do you have a trade of the week pair that you're looking at this week, or is it just the US dollar?
It was actually the US dollar. I think it's probably more a pair of interest more than anything else. I think really the US dollar is the most interesting trade for me. And what it does from here, I think, the pullback is what I'm hoping for. That would be my trade, and that would be a 110 move to the on the euro. So that's definitely the most interesting trade for me.
Okay, so it's like this moves down, confirms, comes back to 104 effectively, and then the euro is a proxy to 110. All right,
that is the trade of the week.
Okay, there you go. That's the trade of the week. From me, I guess I really wanted to use gold, but I can't do it because it's had such a big breach out. So even though I like it, so I guess probably silver would be the second best. And we just looked at that before. And what I'm looking for is a breach of 3150. Close above 3150. I think that should push to 32, and then maybe even new highs as well. So 32 would be the next little target. Good day trade area there. Basically equilibrium to equilibrium. And what you might notice as well, what I'll just do here is I'm going to use a fixed range volume profile on this entire range. And what you might notice is we're on the most traded zone at the moment. So basically, we are trading where everyone's placing a lot of positions. And at the moment, the trend, even though it's lower high than over here, it's come off this accumulation base. So I'd like to see day traders kind of start picking up silver here. We don't know that's going to happen, but there were some nice signs, and it needs to defend, of course, these lows. So hopefully it's an accumulation, and I would say silver is around that level. Well, it's that time of the session, Ty, where we ask everyone out there, you guys, what you want us to kind of cover. Are there any currencies you'd like us to have a look at right now? Put it in the chat, and we will go through those. While we're waiting for your questions, I want to have a look at a couple of unusual positions. First up, we'll talk about Tesla. So, of course, we've covered this one for a few weeks now, and we've covered how good that and fairly predictable that 30% move was in terms of the price action, showing us the way. And we're in consolidation. Now, this is not unexpected. This was our heavily traded zone, very important area. And we know now that, of course, we've got kind of like a rejection up and a rejection down. So what I've done is I've marked out the high here. And I believe a close above 260, I think it's 265. Let's just quickly mark that out. Yeah, 265. That could be so significant. There's a lot of options that will come into play. Price action will obviously be dictating that we move to the next level. And I wouldn't be surprised to see a 300 handle on Tesla if that occurs. So the shorters are here, the buyers are here, and we're going into another coiling period. So as we stay in, remember, the longer we stay in, the bigger the breakout, and usually the more aggressive it's going to be. So that's going to be a good one. All right, we've got a question coming in here, Ty, for New Zealand US dollar. Let's have a look. New Zealand USD. I did do some analysis on this last week, and we saw a market that if we go to the high time frame, let's just do a top-down analysis here. So we'll actually go as high as we usually go. So we'll start in a monthly. And what this does, it helps you get a bit of an idea of, is the market down? Is there significant trend line? So automatically my eye goes to that trend line. So I know that's there. And that's no joke, that trend line. You can really see it's very important, isn't it, Ty? And we also know that it's found some form of big support here on the monthly. And we also know that there seems to be a lot of problems in here. So if we end up, this is actually a pretty strong candle, but if we end up clearing this level in the future, it's going to be very significant for bulls. So yeah, this is what we always do. We always go and start with the monthly. Even if we're day trading, we shouldn't actually put two lines in. Let's just fix that. Anything else that you observe here on the monthly, Ty?
No, I think that's I think it's trying. I think it's definitely one to watch. Well, I think it's doing all the things that we would be having certainly a high alert look on. That's for sure.
You might notice that's similar to Bitcoin in some ways. 62, what a level. Inverse head and shoulders currently, if it does breach through there. Let's actually take the length of this. This is what happens when you use the higher time frames. You get a bit more of a top-down approach. And let us know in the chat if you like this type of thing. This is what we would do. This is what I would do as well, and Ty would do in terms of analysis. Doing analysis on this, because we want to break down and understand where are the flows. Of course, we'd use more indications and techniques, but in general, when you're just doing, let's call it naked chart analysis, we must know where are the significant levels. So for me, I would instantly alert myself to a break of this 62 plus. So I'd set an alert in the TradingView platform, MetaTrader 4, MetaTrader 5, whatever you're using with Pepperstone. And then I would say that could be a beautiful inverse head and shoulders, which probably would push out. Yeah, I mean, it makes sense, about 65. So there could be a significant shift. I mean, this would be a very good period to be net, I guess, biased towards the positive side. Ty, would you agree? Weekly looks pretty good. No, we might. Maybe I'm lagged. Maybe Ty's lagged, but I'm pretty sure he will. So this closure out here is significant. And of course, the downward trend is also there. Now let's go smaller time frames. So we see that little bit of rejection. We know at the moment this market has been kind of going sideways, then weakening off, then rallying, then weakening off. And that was certainly a good sell. So there was good selling up here and it came down. Now, I would have usually thought this was going towards 60 cents. But of course, the events of the weekend have pushed the US dollar down and therefore started to push other currencies up a little bit. And that means that we might be shifting towards the upside. So one of the day areas I'd be marking out now is above this high, 6150. So I'd definitely mark the 6150 out and look for a breach above there. That would be incredibly significant on the daily. So let's now scroll down smaller time frame. Someone's probably in there. I would say smaller time frame, this is going bullish, and pullbacks should be met by bull demand. So this is the type of thing where I believe that we're probably defending around this demand here on the smaller time frame. So 60, 67 would probably be where we're at. We're at the first point of real issues in terms of the supply or resistance. And of course, we've got this, some people would call it fair value gap kind of range here, where there's no trade due to a natural gap from the close on Friday into the Monday. So yeah, I think the market's bullish at this stage on the New Zealand dollar. Pullbacks would be met by bull demand, and the really significant momentum flows would start at 6150, and the super significant ones at 62. And that's when you'd probably gain the most amount of edge. When you see a breach of here or a breach of here, you could start to then look really small time frame and say, okay, there's a good chance that it goes from here to here. And something we talk a lot about on our day trading masterclass course and a few other things over at FX Evolution. All right, let's have a look at LL's question. I hope that helps, by the way, Grace. If it does, let us know in the chat. And LL says here, can you please have a look at US dollar yen? Thank you. We certainly can. Let's have a look at the US dollar yen. So we'll do the US dollar yen for you and load that up. Now, as you know, we've talked about this a few times. It has been on one of our trades of a week, but we got to be very careful with the yen pairs because there's all sorts of central bank intervention. Now, this is getting crushed at the moment, 2 weeks of crushing. Weekly 20 moving average has been strong. We got your back, Ty.
Yeah, I had a complete power meltdown. I'm back.
Right.
Sorry about
We've
that.
got your back now. So US dollar yen is what we're discussing at this point. So I'm just on the, I'm not doing a full monthly breakdown, but basically it's weakening to where I would expect some form of dynamic support to possibly come in. It's a freight train. So let's go look at the daily. That's very, very weak. So what that tells us is that we don't want to be just buying the dip. No. I wouldn't personally. You must buy the V or the rip, and that's where most traders come undone. They initially find a target level. Let's say it was this low here. You go 154.80 buy. Okay, now that's okay if you scale in. You might buy a quarter of a position, and you're prepared to lose on that because you have FOMO or you need to be in the position. But this is a freight train down. It must have a rip, and what I like to wait for is some form of structural consolidation. It should happen because to stop a trend like this, generally speaking, probably 7-8 times out of 10, Ty, it's usually going to do something like that, isn't it?
It has to. It's very. I wouldn't be expecting just a one candle reversal on this one, not when it's coming down so quickly.
Yeah.
And if you go down to a 4-hour chart, you'll actually see that it was actually a very easy entry to actually join in on this short. Like we were talking about its weakness and its potential dangers, only last week, really. But you can see here when it failed to make the second high just on the 20 moving average. The last time I touched a 20 moving average here down below, that was a significant failure point because it didn't make the previous highs level. It didn't make the 159 and it turned around earlier than that, and the 20 moving average was just forcing it down. So yeah, really, we had our signs that that level was going to get broken well before it actually got broken. Now, the 20 moving average on the 4-hour is an extraordinarily respected zone, and one that needs to be respected.
Can I preface that just because I know you like, I just want to always preface this for everyone. It must show left-hand side respect of that time frame. Yeah. So I wouldn't use the 20 every single time. I think Ty and I agree on this. It's dynamic. You have to see that replication, like we saw with the semiconductor versus SPY. Because I had a question about this, and they were using the 20, and there was no respect on that particular time frame. The 20 is the most respected, but it has to actually show a history of respecting, doesn't it, Ty?
Absolutely. Yep.
Yeah.
And you could see that it has here on the left. So really, there's no reason to think that it's not going to do the same on the right. So once it did that and it failed to make a new high, you're on high alert for shorting opportunities, especially when we've seen a sell-off to the magnitude that it did from basically 162 all the way down to effectively 157. So very, very good trading on the end. But I think, like Tom said, I'd be very careful on that V-shaped reversal or an expectation of a V-shaped reversal without some sort of consolidation at that key zone first.
Yeah, I'd probably say there's a little bit more weakness to come first. And then around here is where I'd expect the consolidation if it's going to come in. And then we see whether we can get a structure towards the over prevailing trend. But yeah, be careful. It's a freight train down. Last question coming in here from Limbo says, do you mind also having a look at the coffee contract? You are very, very, I guess you would say brave person, Limbo. I'm not a huge fan of the softs. I mean, obviously they're offered, but the thing with softs is just remember there are roll contracts or some costs withholding them. So make sure you're aware of that. It's very important. So when you look at this coffee contract, you really do want to be looking at trends. Also, you need to look at weather, because weather is a huge important factor in here. And then you will also want to be looking at, I guess you would say, the crop, like how good the crops are. Now, that can be difficult news to get, Ty, but in terms of pure price action, we are at the resistance highs. So we are right at the high that you would expect a resistance at. The trend is certainly up in terms of the weekly. The trend seems to be up in terms of the daily. Small shooting star up here. I probably wouldn't fight this, frankly, but I guess there might be a small time. There is a small time frame change of trend towards the downside. So you got a high, low, high, high, lower, low. You could have shorted at 250 if you wish to, but it's a dangerous short, of course. And target, you would want to use a volume profile. And I would say the target would be about 230 based on I.
Yeah. Based on the eye, that's what I'd be doing, but I wouldn't be touching this one.
Yeah, look, there are hidden, sometimes it's a hidden risk that you're taking. And
Yeah.
remember, these contracts do close as well. So be aware that they're not like a free flow all the time. They will close and open. So I guess if it's your first time to softs, I made a mistake on softs a long time ago. It was quite an expensive mistake. One thing about softs is you just need to be aware of the risks. And I think that's important. If you're going in really quick and sharp and you have a great system on it, then that's fine, but just be careful. Anyway, 230 could be where this is going, but ultimately the overall trend is still very bullish. All right, guys. Well, from everyone here at Pepperstone, I want to say a big thank you for coming out. And of course, links in the description down below if you want to attend more of the events like this, the Pepperstone offers. Make sure to sign up so you get alerts for it. And we'll see you next week at Wednesday at 8 p.m. as per usual, 8 p.m. AEST, which is Australian time. And it should come up in YouTube anyway on what that is in your relevant area that you're in. It's always a pleasure having you here with us. We hope that you found some good value in today's session. And I'm looking forward to seeing how these earnings kick off. Because remember, we have Netflix and we also have TSM, which is a semiconductor stock coming out on Thursday. That's going to create a lot of volatility. And although we can't really predict exactly what's going to happen, Netflix is at its all-time high area, again, like coffee, right at the resistance. And of course, TSM is just been on, I think it's on a 45% move from last earnings season, Ty. So expectations are significantly higher than they have been, but will they live up to it? At the moment, it looks like it's rotation. Thanks, guys. Bye for this week.
Thanks, everyone. See you next week.
See you, everyone.